Hello traders and welcome to another video review. Today is Tuesday, May 5th, 2026. Let's take a look on the Forex economic calendar for today. Alright, what do we have here in the calendar? Very important data releases. First off is Reserve Bank of Australia interest rate decision. As expected, RBA hiked the interest rate from 4.10 to 4.35, and this is the actual interest rate in Australia. That's already priced in. Now, London session looks like it's non-event in terms of the high impact data release. Nevertheless, during the US session, we have building permits scheduled for release at 2 o'clock, global services PMI data scheduled for release at 3:45, non-manufacturing PMI data scheduled for release at 4 o'clock, job openings scheduled for release at 4 o'clock, and new home sale scheduled for release at 4 o'clock. All of this data looks like they are very important. They might cause a lot of volatility on the markets today, so please stay focused, stay vigilant. We are going to switch to the technical part now, and we start with euro dollar. So the euro dollar 4-hour time frame chart is moving lower after the local high at 1.1786 has been made, and the bearish engulfing pattern, some kind of a pin bearish pattern as well, has been made here on this level. So we are now sitting just above the trend line. If we extend our channel, I need to grab this one, I guess. There you go. Okay, channel is extended. You can see that we are back inside of the channel, and now we are testing or are about to test the upper channel line. This is the level of 1.1670. This is the level of 1.1641. This is the demand zone. So we are about to test the middle of the channel line. If we break below this demand line, especially because there is a negative momentum here on the hour side, only 41 points. So the market is under the bearish control after the failure to move above the swing high at 1.1850. So euro dollar under the pressure, British pound under the pressure. We got the movement to the upside towards 1.35 56 56 next target 1.3725 has not been hit. We reversed lower, so now this level here will be the local technical resistance and the swing high. There you go, and this one has been violated, so the next target is located roughly around 1.3446 with the momentum below the level of 44 points only. So another bearish pressure is clearly visible on the chart, and the situation here looks like we want to test at least this zone here in order to see what is going on the lower side of the market. US dollar versus the Japanese yen is still below the major technical resistance 157.41, which used to be the range low. Not too much of the movement here, very limited volatility, despite the fact that the momentum is increasing right now 41 points. Nevertheless, we are sitting below this key technical resistance. Dips are being back up, but this is at least 200 pips range. So right now the situation looks like the range is being bought on the dips. Nevertheless, there is no movement to the upside, right? So, and the market itself doesn't look like it know what it wants to do, to go back inside the range or reverse lower. So we need to give this market a little bit of time to see what is going on here. Right now dips are buying, but no movement to the upside has been spotted. S&P 500 S&P 500 coming off the 7,271 swing high, tested the technical support 7,192, and it is bouncing right back up, but the momentum is moving far away from the extremely overbought conditions. As you can see, clear bearish divergence is being built here on a 4-hour time frame chart. So the market is not under the pressure just yet, but it's definitely lack of the momentum might be concerning in a while. Crude oil bounces from the levels of 99.11, just above the technical support of 98.37, as the momentum hit the level of 46, almost the level of 50. A little bit of the bounce to the upside, local high 107.43, so a lot of volatility during the last 24 hours. Nevertheless, we still are trading below the trend line, with the level of 110.90 rejection. So that's the situation here. This is the old trend line. Let me just place another one so we can place it on the chart. There you go, 110.90. So we got very nice narrow zone for the bears. Very nice for the bears. They will likely be more active inside of this zone if the price will ever get there. For now, limited volatility. We can see some kind of upside and downside intraday action. Nevertheless, if we take a look a little bit lower, we got this blue rectangle, which indicates the gap has not been yet closed. So for now, 54 points of the RSI is barely positive, and the market still is trading without any clear direction. And last but not least, the Bitcoin. The Bitcoin finally is trading above the level of 80,000. So this situation here means that we hit exactly the upper channel line or upper flag pattern. Let me just show you this on a daily time frame chart. This is where we are right now. This upper flag pattern line, the black one, has been hit. So right now is to be or not to be for the best. The second reason for that is we entered the very specific zone here. This is the supply zone. Local high was made at 81,332 with very strong momentum, almost overbought market conditions. Nevertheless, any breakout above this zone is basically very bullish. So we have this zone located between 80,600 and 83,780. So please keep an eye on the price behavior inside of this zone. It might be very interesting to see how the bulls and bears definitely cope with this situation. As you can see, bulls are up to something. Nevertheless, the bears are still waiting, right? So this is not like one-sided market. Only, let's say, 1,000, 2,000, let's say $3,000 gap here, which is very important, because if I show you this to the daily, as you can see, it used to be very nice technical support, then resistance, and breakout here is very bullish. So very interesting market behavior should be expected inside of this $3,000 range. So please keep an eye on it. We will see tomorrow how this situation developed over the Tuesday. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.